Ever heard of a TGE?
Yeah, it's not something you hear every day unless you're knee-deep in the crypto world. But trust me, this is one of those things, one of those terms you're going to want to wrap your head around.
It's true.
Especially if you're, interested in the future of, pretty much everything.
It's true. TGEs are having a moment.
They are.
In the simplest terms, a TGE is like, uh, imagine the birth certificate of a cryptocurrency token.
Okay.
That moment, it's officially recorded on the blockchain.
It's like minting a brand new coin, but instead of, like a regular coin, this one could give you access to some revolutionary technology, a decentralized community, or heck, even a whole lot of profit.
And that's what we're going to unpack today.
We are.
We'll break down what a TGE is, why it matters,
Mm-hmm.
and give you the knowledge to navigate this exciting and often wild corner of the crypto world.
All right, so let's unpack this TGE thing a bit further, shall we? I think a lot of people, when they first hear the term, assume it's all about fundraising.
Yeah.
And while that's often a big part of it, it's not the whole story, is it?
Absolutely not. While raising capital is often a goal, a TGE is really more about the creation and distribution of a cryptocurrency token. It's that pivotal moment when a digital asset is born,
Right.
given life on the blockchain.
And to use an analogy I think people can relate to, if traditional fundraising is like printing a limited edition of a valuable comic book,
Okay.
a TGE is like creating the printing press itself.
Ooh,
It's about establishing the ground rules for a whole new digital economy.
a very apt analogy.
Right.
And just like there are different types of printing presses designed for different purposes, there are different types of cryptocurrency tokens, each with its own unique function and value proposition.
So we've got these tokens being minted, but they're not all created equal, are they? Tell us about these different flavors of tokens.
Let's start with utility tokens. Think of these like a VIP pass to access a specific platform or service within a blockchain ecosystem. For example, a utility token might give you priority access to a decentralized cloud storage network or discounted transaction fees on a trading platform.
It's like having a backstage pass to a concert.
Exactly.
It doesn't give you ownership of the band, but it does give you special access.
Right.
Then we have security tokens, which are a bit more straightforward, right?
Yes, security tokens function more like traditional stocks. They represent ownership in a company or project and often come with certain rights, like voting rights or a share of future profits.
So with security tokens, you're hoping the band gets big so your investment grows. And last but not least, we have the governance tokens, the rock stars of decentralized decision-making, am I right?
You could say that. Governance tokens give holders a say in how a project is run. You might get to vote on things like new product features, changes to the platform's fee structure, or even the future direction of the entire project. It's about putting the power in the hands of the community.
So we've got our utility tokens, the access keys, our security tokens, the ownership stakes, and our governance tokens, the voting rights of the crypto world,
That's a good way to put it.
each playing a specific role in this new decentralized economy. But how do these tokens actually make their grand debut? What does a typical TGE look like behind the scenes?
It's a multi-step process, a bit like choreographing a complex dance on this massive transparent stage with the blockchain acting as our vigilant choreographer.
I like that the TGE dance. So what's step one? What's the first move in this crypto choreography?
It all begins with the white paper, the project's grand vision, and a detailed explanation of how the token fits into that vision. It's about transparency, building trust, and excitement within the community.
The white paper, it's like the project's manifesto, right? Their chance to convince the world that this token is the next big thing.
Precisely. A well-crafted white paper can be incredibly persuasive. It needs to clearly articulate the problem the project is solving, the technology behind it, and why their token is essential to its success.
So you've got your compelling vision, you've piqued everyone's interest. What's next?
Next comes the smart contract. And this is where things get really interesting. This is essentially a self-executing contract coded onto the blockchain.
Okay, stay with me, smart contract. It sounds a bit intimidating.
Think of it like a vending machine coded onto the blockchain.
Okay.
But instead of snacks, it dispenses tokens. You put in the right cryptocurrency, you get the specified token. No human error, no manipulation, just pure code execution based on predefined rules.
Interesting. So it's all about ensuring fairness and transparency in the distribution process.
Exactly. The smart contract dictates how many tokens are created, when and how they'll be distributed, and even outlines the rules for how those tokens can be used or traded.
Which brings us to the next step in our TGE dance distribution.
This is where the rubber meets the road. where those meticulously coded tokens flow out into the world. A well-designed distribution model allocates tokens to early investors, the project team, and often reserves a portion for future development or partnerships.
It's like a well-calculated recipe, making sure all the right ingredients are in place for success. But I imagine there's this constant tension between rewarding early supporters and ensuring the long-term stability of the project, right?
Absolutely.
Yeah.
Too much emphasis on early investors could create a scenario where the token value skyrockets, then plummets, leaving later adopters with losses. On the other hand, being too conservative with early incentives could hinder initial growth and enthusiasm.
It's a delicate balance for sure. So the tokens are out in the world, the community is buzzing. What's the final step in our TGE journey?
The grand finale, the exchange listing. This is where the token makes its debut on the open market, where people can buy, sell, and trade it freely.
And that's where we often see those like eye-popping price swings, right? The exhilarating and sometimes terrifying volatility of the crypto market.
Exactly. The initial price of a token is often driven by speculation and market sentiment. It's like the opening night of a Broadway show. Everyone is eager to see if it lives up to the hype.
And just like with a Broadway show, only time will tell if it becomes a timeless classic or a quickly forgotten flop.
And that brings us to a crucial point. While a successful TGE can generate a lot of buzz and attract significant investment, it's just the first act in a much longer story.
Right, because ultimately the true value of a token lies in its utility, what people can actually do with it.
Precisely. Can it be used to access groundbreaking technologies? Can it facilitate real-world transactions? Does it empower a thriving community? These are the questions that will determine a token's long-term success.
Speaking of questions, I know there's often confusion around a few other acronyms in the crypto space, ICOs and IEOs. How do these relate to TGEs?
It's understandable why those terms cause confusion. They're all interconnected but have distinct meanings. Let's start with ICOs, or initial coin offerings. While a TGE is about the creation and distribution of a token, an ICO is more specifically focused on using that token to raise capital. Think of it like an IPO, but instead of issuing shares of a company, you're offering digital tokens in exchange for funding.
So an ICO could involve a TGE, but a TGE doesn't necessarily mean there's an ICO happening.
That's correct. Now, an IEO, or initial exchange offering, adds another layer to the mix. It's essentially an ICO, where a cryptocurrency exchange acts as a sort of intermediary and vetting platform.
So instead of the project launching their token sale independently, they're partnering with an established exchange to manage the process and, presumably, provide an extra layer of legitimacy.
Exactly. The exchange will vet the project, provide a platform for the token sale, and often list the token on their exchange once the IEO is complete. This can be beneficial for investors as it offers a degree of oversight and due diligence, but it's important to remember that even with an IEO, risks still exist.
Right, no matter how much due diligence is done, the crypto world is still young, and the regulatory landscape is constantly evolving.
Right.
Now that we have a solid understanding of the TGE landscape, from the technicalities to the various acronyms thrown around, let's dive into some real-world examples to illustrate how this all plays out in practice. Would you say that's fair?
Absolutely. Let's put some faces to these acronyms, so to speak. Let's start with a project that many consider a TGE success story, Polkadot.
Polkadot, or DOT as its token is known, is a great example of a project that used a TGE to, not just raise funds, but to really galvanize the community around a shared vision. In this case, creating an interconnected blockchain future.
So their TGE was back in 2017. What happened? Give us the highlights.
They raised $145 million to get things rolling. And for those early backers who recognize the potential of their vision, the returns have been, well, astronomical. We're talking about a return on investment well into the four-figure range. It's a testament to the power of TGEs to generate, life-changing wealth for those who get in early on a project with real disruptive potential. That's the dream, right? Finding those diamonds in the rough. Speaking of problem solving, another example that comes to mind is Chainlink, or LENK, which set out to solve a pretty major challenge in the crypto world, the Oracle problem.
Ah, yes, the Oracle problem.
Yeah.
It's a bit of a brain teaser, but crucial to understand. Essentially, blockchains, for all their brilliance, aren't great at interacting with real-world data. They need a secure and reliable way to access information from outside their own ecosystem. That's where oracles come in. They act as bridges between the blockchain and the real world, feeding in verified data.
So like a secure data pipeline, and Chainlink created a decentralized network of these oracles.
Precisely. Yeah. And their TGE was instrumental in making that happen. They raised $32 million, using those funds to bootstrap their network, incentivize early node operators, and essentially lay the foundation for what is now considered the gold standard for decentralized Oracle services.
Which brings us to our final example, Filecoin, or FIL. I've definitely seen my share of ads for decentralized storage. What's their TGE story?
Filecoin is a fascinating case study. They had a truly massive TGE back in 2017, raising over $257 million. Their goal was to disrupt the traditional data storage industry, which is, dominated by centralized providers, by creating a peer-to-peer network where anyone can offer up their unused storage space for a reward.
So turning all those idle hard drives around the world into a decentralized data center? Clever. But all of these examples, while exciting, also highlight the importance of approaching TGEs with a healthy dose of caution, right?
Absolutely. While the potential rewards can be enormous, TGEs are not without risks. It's important to remember that this is still a relatively new and unregulated frontier, which means there are inherent risks involved. Volatility, for one. The price of crypto tokens can swing dramatically, and TGEs are no exception. Fortunes can be made and lost overnight.
That's the Wild West aspect of crypto that we often talk about. It's important to stay grounded and not get caught up in the hype. What other risks should potential investors be aware of?
Scams are, unfortunately, a reality in this space. Just because a project has a flashy website and a promising white paper doesn't mean it's legitimate. Thorough due diligence is crucial. Scrutinize the team behind the project, their experience, their track record. Dive deep into their white paper. Do your research and, if possible, talk to experts in the field before investing a single penny.
Sage advice. So as we've seen, TGEs are a fascinating and potentially transformative phenomenon. They have the power to democratize fundraising, empower innovative technologies, and reshape entire industries. But they also come with their share of risks and uncertainties. What's the key takeaway you hope our listeners walk away with today?
The key is to stay informed, stay curious, and don't be afraid to ask questions. TGEs represent a new paradigm for innovation and investment, one that is still being written. By understanding the mechanics, the potential, and the risks, we can all navigate this evolving landscape with greater confidence and hopefully make informed decisions that align with our own financial goals.
And as always, never invest more than you can afford to lose. Words to live by in the crypto world. Thanks for taking this deep dive with us. We'll see you next time for another fascinating exploration of the ever-evolving world of blockchain and beyond.